Good morning, guys. Matt from Blaze Capital here. So today we're gonna kind of elaborate on the video from last week, and we're gonna go over stop losses. These are a valuable tool in protecting how much money you're gonna lose or win on each trade. So I chose VFF as my example. It had a very nice step pattern. Not all stocks are gonna look like this. It's just pretty good for example purposes. So with stop losses, it's all going to come down to personal preference. So, and which kind of trading you do. So if you do like swing trading or like longer term trading, you're going to want to base your decisions off of a longer period chart. So 1 hour, 4 hour, daily, whatever you want to do. And you're probably going to be trading less capital than somebody who's doing more day trading, whereas you're looking for larger percent gains, and when somebody who does day trading is going to be looking for smaller percent gains, as well as day traders typically use a bit tighter stop losses than swing traders. But again, it's all going to come down to personal preference and your risk reward and all that kind of thing. So for argument's sake, we should always be entering a trade based on some reasoning. So whether that be a breakout of a base or oversold, such as here, and then you want to be calculating your risk reward beforehand. So first thing we're going to do here is we're going to draw our support and resistance lines. So you guys should already know how to do this. So there's a video on it in my channel if you haven't. So we're going to draw one here. Resistance somewhere around there, and then resistance turns into support. So we'll call this resistance as well. So we'll use this area for our first example here. So if we draw a trend line, I know it's already getting pretty chaotic here. All right, so for this example, we would have bought on the break of this downtrend. I know it's hard to see, you can zoom in a bit if you need to. So when it broke out of there and it broke over this resistance right here at 1350, that would have been a good spot to buy here. And then your stop loss would go probably below the wicks here, so under this 1272 level, or you could put it at break even after you're over top, so somewhere around 1350. Personally, I'd like to leave a couple pennies below there. I'd rather leave a little bit more risk for myself and have less likely chance to get stop loss hunted. So stop loss hunting is when people can see your sell orders in place, and they would drive the price down in order to get those shares and then drive the price back up. So all the banks, the algos, all that stuff, they know where the support and resistance lines are, and they know where you're likely going to have it, and then they can also see the level too. So if you put it where everybody else puts it, then you're going to have a higher risk of getting your shares stolen versus if you leave looser. However, you're also risking more capital at that point. So it's all going to come down to personal preference, and I can't really help you with that. I just give you the two options. So you can set a looser stop, have a less likely chance of getting stopped out, or you can have a tighter stop, have less risk. This is better if you're able to sit at your computer and buy back into the stock. So if it drops down below the support and it just creates a hammer or something and then comes back up, then you can buy back into the stock because your reason for buying in is still the same. Okay, so there for that example, stop loss below here. Now we have another breakout here, so we had a base just under, we'll call it 15. So when we get a breakout here, it's a buy signal, then you would put your stop loss either somewhere down here, or you could put your stop loss at break even again. So we'll go get rid of all these lines here. I'm going to put one back here. So after we get a breakout, most of the time, the stock is going to come back down and test the old resistance. It doesn't happen all the time, but a lot of the time it does. I don't want to say most either, because that's not really true. So here, broke out, up, came back down, tested, broke out again, up. So this one it didn't come back down to test. And then, oh, look where we came down to after that Citron report there. Exactly to 1406. That's weird. Okay. So yeah, there's stop loss. So this is on a longer period. So if this would be more for swing trading or like week trading, whatever you want to call it. So that's how you would do those. I use a 4-hour chart. You can use a daily chart if you want, or the 1 hour probably, because you can still see these levels. I just like the 4-hour because it gives you a bit more information. So here, like you can still see there's like three or four touches to that 14 line. So that's why we kind of want to keep it slightly below there. So like 1380 or something maybe if you don't want to get stopped out, or you can put it tighter and then have a more likely chance of getting stopped out. So you typically want to avoid putting it right on the support lines and right below the support lines. Another thing someone will do, usually like on the 5 minute, you can put a stop loss at like the low a day or something. So like if we go for the Friday, we had a bottom of the day was at 15, it was slightly low, it was like 1581 or whatever. So you could have bought in here. So if this, for example, oversold stochastic, oversold Bollinger Bands, could have entered there. So then you would put your stop below your entry here, and then it never hit that for the rest of the day, and then you have to decide when you want to take profits. So if you're doing shorting, it's more or less the same thing. So say we're going to short up here because it went way outside the Bollinger Band, right there. So once we got confirmation that it was going to drop, it went underneath the VWAP here, back under the Bollinger Bands. You could put your, you put in a limit buy, or a stop buy, not a stop loss if you're shorting. So what that does is when you borrow the shares, stock drops, you put in a buy, so you're going to buy the shares back if it goes back over, we'll say, the top of this bar here. So what's that? 1714. So put in a limit buy at 1715 or something along those lines, and that will buy the shares back. Those will buy the shares back at that time. So it works the same as a stop loss, so it limits your losses. The problem with so we went over all those limit orders, market orders, etc. So if sometimes it'll skip over your stop loss. So for the most part, as long as it's a liquid stock, VFF's a little bit too choppy, in my opinion. Same as like CWeb, Trulieve, and all those companies. They have really big spreads, so I generally use a stop market. If you want to like limit your losses, you can put in a limit order, but then you risk that it's not going to get filled in time, or like it might get filled in the way back up or the way back down, or when you don't want it to get filled. So I generally stick more towards markets, only on high liquidity stocks. So some of the bigger names that have pretty good spreads, like Canopy, Aphria, Aurora. The S&P as well is very, very liquid and easy to get out of. So yeah, that's how you do. If you have a stop loss position, you can put, a short position, you can put your stop losses going upwards. And then all those different orders we went over, you can do those too. So if you're shorting VFF again, so we'll have a trailing stop loss on the upside. So once you hit a certain percentage gains and it drops back down, it'll stop you out. So those are just another tool. You just have to use which tool is good for your personal preference. Same as when it's going up. So like here, like you could buy here, put in a trailing stop, and then you would have rode it all the way up to probably here. And then if you had you would have got stopped out somewhere around here if you had like a 30-cent stop loss or something like that. So those are just different tools. I'm trying to find a good example of when, like a stop loss hunt. Afria hasn't been having a good time lately. There's not much point looking on the CSE. CSE with TD, they don't let you do stop losses, so you have to do it manually. So if you're trading CSE stocks, what I suggest is putting an alert on your phone. So TradingView offers alerts. A lot of the brokers will offer alerts, and then you can have so like that's a pretty good example of a stop loss hunt. But again, like with CSE, you can't use stop losses on most brokers. I think RBC offers it, but don't quote me on that. Sorry, I got sidetracked. Stop loss. So put your order, like an alert in. So there. So we can put an alert here. So Australis crossing. Okay, we're gonna go back to the 4-hour chart and look at the next support level. Okay, so 109. So we're gonna set an alert on TradingView to let us know when this crosses. So I'm gonna set it for 109. And you don't necessarily have to sell right there, but you can open your chart up on your phone or whatever, and then you can take a look, and then you can make a decision. So if you're manually stopping, you want to wait for confirmation typically versus just selling instantly. So again, like they'll just stop loss hunt and then go back up. So we will set an alert for 109. So company name, crossing, value, 109. And then you can change it if you want every time it happens or just once. And then you can do crossing up or down, whichever way you're doing it. And then I don't have the right plan for this, but you can set that open-ended. You can just set the date for, I think it's like a month or two. Yeah, a month, excuse me. And then you can have it send you an email or a text message or whatever. So we'll create that. And then that's how we can just keep an eye on companies that we can't actually set stop losses with, okay? So that's about all I have to go over, I think. So the Cole's notes are, it's gonna come down to personal preference and how much you're willing to risk on your trade as well as your position sizing. And just keep in mind the support and resistance levels, and if you want to get like your risk tolerance for getting stopped out versus if you can risk a little bit more capital. Okay, awesome. Just shoot me any questions, guys, if I forgot anything. All right, have a great Sunday.